Welcome back. I'm Pratap here. Today is the 14th May 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. So yesterday we identified 1, 2, 3, 4, 5, 6, 7 and Glenmark is having both 75 minutes and daily zones. So total 8 high liquidity zones were identified yesterday. And the first one is Bank Nifty. We got couple of trades. Let us discuss those trades. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. So all the training videos are available at our NeoStock YouTube channel. You just visit this channel from the home page, click on this community tab and then you can find this post. Here you have a link that will take you to the training videos. And click on this playlist, YouTube playlist link. Now you will be getting into a playlist supply demand zone price action course. Here you have all the training videos. What you need to do, just scroll down to the bottom of this page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from this YouTube video description, join in the channel, Telegram channel. It will be helpful to you. Each time when we release a new YouTube video, we'll provide an update in the channel. Now let's get into the analysis discussion starting with Bank Nifty. Bank Nifty is having a high liquidity daily supply zone, drop, base, drop. And this is the one we fine tuned. So this daily zone is fine tuned with 75 minutes time frame. In the 75 minutes time frame, I have identified one zone. We have a rally, 3 base candles and a drop candle. This is the fine tuned 75. Inside this 75, again we have 15 minute zone. So here you have a rally candle, 3 base candles and a drop candle. This is the 15 minute zone. Apart from that, you are also having one more 15 minute zone, but this is not a fine tuned 15 minute zone. See, drop, 2 base candles and a drop. This is not the fine tuned. If this is not the fine tuned, then why we can identify this zone? See here, look into this zone. See, prices are entering and coming out from multiple times from this zone, from this 15 minute zone. The first time, second time, third time, and today it is the 4th time, again 5th time, again 6th time, again 7th time. Anyway, today's price action we know only after starting today's market. But yesterday, before fine tuning, already several times prices entered into this zone and giving a good move. Again reached, giving a good move. Again reached, giving a good move. That means definitely this is a high liquidity zone. There is a higher possibility. If this is the high liquidity, then we can plan for an aggressive trade. You already learned aggressive trade in lesson 21. In our training lesson, 21.4 or 5, I didn't remember, but one of these lessons you learned aggressive trade. So what is the aggressive trade? We have several types. One type is an high liquidity zone can be part of another high liquidity zone. You have a daily high liquidity zone. Inside a daily high liquidity zone, you have a 15 minutes high liquidity zone. Not only 15 minutes. Inside 15 minutes, we have a fine-tuned 5-minute zone. That is also a high liquidity zone. That I will show you. That means we need to plan our trade in that fine-tuned 5 minutes zone as an aggressive trade, because that 5-minute zone is also a high liquidity zone. So let's look into that. First, let us focus on this area, because this is the fine-tuned 5-minute zone. Rally, 3 base candles and a drop. Now let's move on to the 5 minutes time frame. So here we have two fine-tuned 5-minute zone. Within this 15 minutes area, we have a rally base drop. Again you have a rally base drop. So we have two excellent fine-tuned 5-minute zones inside this area. I didn't plan this drop base drop. The reason is now it's completely out of this 75 minutes fine-tuned area. So let's rely on these two. We don't have any guarantee it will work or not. But look into this high liquidity 15-minute zone. Inside high liquidity 15-minute zone, we have again a fine-tuned 5-minute zone, rally base drop. And again this is also working multiple times. See here, prices entered, came down, prices entered, came down, again prices entered, came down, again prices entered, came down. Actually this fine-tuned 5-minute zone inside 15 minutes high liquidity, this is the main source for the high liquidity. That's why we can plan a trade in this zone. How many times? Several times we can plan until it is violated, or maybe at least until you have confidence on this, you can plan a trade. And today we got two successful trades. Even third one is also successful, but target is not up to 15 minutes. Why? I will tell you once we get into the discussion. Okay, this is the area you can plan the trade, but actually this zone is working like a wall. It's not letting the prices go above this zone. Entire today's price action, it didn't allow the prices going beyond that. Only one slightly pierced, that is within the stop buffer. Even thereafter, it didn't let the prices go above this zone. Okay, when we got the entry, what is our target? So this is the first entry. We got, this is the 9 o'clock 15 minutes 5 minutes candle, but this is not a 9:15. Let me show you in 1 minute time frame. This is the first 9:15. In case if you missed, again in next again we got 9:19 or 9:20. In one of these candles, definitely you would have got a trade. Then what should be the target? Target is 15 minutes. So where is our 15-minute zone? Here you have your 15-minute zone. 15 minutes demand zone. But reaching up to here is very, very difficult. Sometimes it may reach. That is a rare situation. Why? Because see here, from here to here, it is a huge movement. Once in a while only such kind of targets will reach. Probably it is 1:15 RR. And more than 10% ROI. Reaching here is more than 10%, especially getting more than 10% ROI is in indices. Nifty and Bank Nifty it's a huge target. It's not easy. Most of the times, Nifty and Bank Nifty during the intraday, giving 2 or 3% target is a big target. At least high liquidity zones we have identified around 3 to 3.5% ROI they are giving in Nifty and Bank Nifty. In remaining equity stocks, we are getting 6% ROI, average ROI. So far, Nifty and Bank Nifty giving beyond 4% it's a rare situations. And achieving 10% ROI in Nifty Bank Nifty is practically difficult. Then what we need to do? Set 1:3 or 1:5, whichever is favorable. 1:5 is a good option. Why? Because there is a price action clue. Look into this candle. The prices were moving somewhere from here, there was a rejection. That means in this area there is a strong order flow. Maybe in 1 minute time frame, any zones are there within that area. See here, a zone is created, drop, base, rally. Generally, what happens, such kind of zones, they will not easily let the prices go down because these are newly created zones. This is the 1 minute zone. So anyway, what I did is aimed for 1:5 RR. And from this zone, fine-tuned zone, to this blue color line, whatever I have drawn, till that area, there is a 1:5 RR we can achieve. From your entry till this blue color line, 1:5 RR. So after getting 1:5 RR, it is a good option to exit. So we got an entry here in 9:15, actually it is 9:19 or 9:20, but anyway 9:15 candle, 5 minutes candle, it's not 1 minute candle. And after that in 9:25 minutes, 5 minutes candle, it reached the target. That means trade is completed in just 10 minutes or 15 minutes. Sorry, 10 minutes. In 10 minutes the trade is completed. This is the first trade. Second trade, once again prices entered. This is the high liquidity. It always supports multiple times. And when it reached at 9 o'clock, 55 minutes candle, 5 minutes candle it reached. And again when it reached this blue color line, that is a 1:5 RR. Again 10 o'clock, 5 minutes. That means again in next 10 minutes the trade is completed. And each time Bank Nifty has given 3.9% ROI as per one futures margin cost. That means close to 4% ROI we got. So that's a very good ROI. And after that prices struggled and slowly it was moving. Maybe you would have taken another trade here. Maybe third trade. There is nothing wrong in taking a trade. But this time, see what happened? Prices are slightly pierced this zone. It is within the stop buffer area, but the zone is pierced. When the zone is pierced, probably you should alert yourself. Why? The reason is maybe the order flow may not be very strong now. Definitely we might be having doubts whether it can push the prices up to this 1:5 area. That is a doubtful thing. See, when you are taking a trade, your expectation is at least once again it will reach 1:5 RR. But by seeing this price action, the zone is pierced. Definitely it is an indication that there may not be a very strong order flow to push. So you need to revise your target. Here you have a 5 minutes demand zone. Probably you have to limit yourself to this particular 5 minutes demand zone. From here to here you can exit. This time definitely you will not you will get a very small profit. If anybody would have taken third trade, definitely your profit would have been a limited amount now. Once the zone is pierced, then we can't plan a trade, but it holded multiple times. There could be other reasons behind this. Maybe here institutions created another zone here and pushed the prices. Maybe this is now not part of the high liquidity because this high liquidity zone is violated. Pierced means it is violated. But now institutions created a new 5 minutes order flow. Now whatever the zone they created, new 5 minutes supply zone, you need to consider that as a normal 5 minutes supply zone. Maybe they also kept some good enough order flow. That's why it supported multiple times. Who knows? So this 5 minute zone could be a new high liquidity 5 minute zone. That possibility is also will be there if it is supporting multi-test. But anyway, all these multi-tests are within intraday. The next trading day also it supports multiple tests. Then we can trust this could be a high liquidity zone. So that's why I told you we got 2 successful trades. Third trade is successful only because it is within the stop loss. But you have to exit based on the revised target, mainly because the zone is pierced. And after that you can't plan any trade because this high liquidity zone is no more a valid high liquidity zone once the zone is pierced. After that the remaining whatever the trades, that is as per your normal supply demand zone price action, but definitely not as per high liquidity zone concept. So this is the way Bank Nifty has given 2 successful short trades. Each trade it has given 3,762 rupees. Because same entry, same target. That's why the RR is also 3.9% for both the trades. As I told you, this is an aggressive trade in 15 minutes and 5 minutes high liquidity zone inside a daily high liquidity zone. This is one of the scenarios in aggressive trade as I explained in our training in lesson 21. These are the 2 successful trades we got. There are couple of trades also we got. They are also successful, but we didn't accept them. Why we didn't accept? Let us discuss those scenarios. Glenmark. We got a successful trade, but we didn't accept. But actually Glenmark is having 2 zones. One is a daily zone, demand zone, and 75 minute supply zone. This is the daily demand zone. We have a rally, 1, 2, 3, 4 base candles rally. This is the daily demand zone. And this is the 75 minute supply zone. I will also explain once we get into 75 minutes time frame, how I fine tune. So this is the daily zone, high liquidity demand zone. So we have to fine tune with 75 minutes time frame. So here in this zone we identified, if you look into this zone, here I identified a drop, 5 base candles and a rally candle, drop base rally. This is the 75 minutes fine tuned zone. But this supply zone, 75 minute supply zone, we have a drop, 1, 2, 3, 4 base candles and a drop candle. Actually, this is a medium size leg candle, part of the base. This is identified by our software. This is a 75 minutes high liquidity supply zone. And our software identified both trades. Actually, today we got both the trades. But this one also we did not accept it. Let me tell you the reason. Next one is 15 minutes fine-tuned zones. Inside we have identified demand zone to 15 minute zone. Rally base rally, here drop base rally. And what about this 75 minute zone? Here we have drop, 2 base candles and a drop candle. Again drop, a base candle and a drop candle. This is not a great leg out. We have to accept that. But our focus is inside this fine-tuned area. Any order flow is there or not. But if you observe, there is also again a drop, base, drop. Here also you can draw a zone, right? Drop, base, drop. Initially I have drawn, but when I looked into the 5 minutes, I am not convinced with the structure. I felt like it picked up the orders from this zone and then this new zone is created. Basically it is a LOTL, drop base drop, again drop base drop, both zones could be LOTL. But I felt here we have a strong order flow. That could be the reason behind the creation of LOTL. That you will understand once I get into the 5 minutes zone. So these are the 2 15 minute zone. You may feel there is one more 15 minute zone also. Actually it is valid from 15 minutes point of view, drop base drop. And in demand zone we have 2 15 minutes fine-tuned demand zones. Now let me get into the 5 minutes time frame. In the demand zone we have 2 fine-tuned zones. We have a rally, 1, 2, 3, 4, 5, 6 base candles, a rally candle with gap up. This is a very interesting because we have a pro gap here. And we have a drop, 3 base candles and a rally candle. Then what about the supply zone? Supply zone, see here, observe carefully. We have a nice drop, 2 base candles drop. So this is an excellent fine-tuned zone. Here also we have a rally candle, 3 base candles and drop candle. This is also excellent fine-tuned zone. But here also you may feel like you have a drop, 4 base candles and a drop. But I am not convinced with this candle. The reason is this is a failed ERC candle. It could have been a drop, 2 base candles, 3 base candles and a rally candle at some point of time. If you look into the dynamic way, when prices are entered into this zone, this could have been a rally candle. Because there is a strong order flow, it pushed the prices, and finally this rally candle will become a failed ERC candle. So with this failed ERC candle, you cannot keep inside the base. You can't create a base with failed ERC candle. You can create a base with base candles. If earlier base candles are there, you can keep a medium size leg candle. This is not a medium size candle. See, it's as good as this candle. See, whatever the height this candle is having, almost same. See, this candle is closed here, but this candle is closed here. And here high is here, a little high. So whatever the extra this wick it is having, if you add, almost it is same as this candle. So that means this is a large candle only, but large candle, failed ERC. So this is the reason why I am not convinced to create a zone here, like drop, base, drop. I am not convinced because of this candle. And also clearly it is visible, 5-minute zone is the reason behind creation of this failed ERC candle. So drawing a zone is not meaningful, but if you look into the next price action, you feel like you will draw a zone here, drop, base, drop. If you see how big the zone is going to be, the base, it is going to be a very big base. You feel like maybe this is a zone, valid zone, by seeing the next price action. Why? Because once prices came down, you might be thinking the order flow from this zone is pushed the prices down. Maybe it need not be because of the order flow from here, maybe because of this 15-minute zone. See, prices came close to this 15-minute zone, which could be the reason behind pushing the prices. Even today morning also, prices started from here, again pushed. Definitely it is difficult to take a trade because 9:15 started, within fraction of seconds, prices came down. It may not be unless you put a pre-order before the market starts. Otherwise, once market is started, before placing your order itself, prices would have come out of this zone. Everything happened in fraction of second. Let me show you in 1 minute. See today, prices opened, quickly it came down. After that, prices didn't go here. But earlier when I shown you Bank Nifty, that was not the case. Bank Nifty, the first trade, first candle went at 9:15. After 2 minutes again prices went into the same zone. At least there we would have got a trade. But there are higher chances of missing trade here. Maybe if anybody got a trade here, you are a lucky guy. Anybody would have kept pre-order here, probably your trade would have been executed before the market. Some of you peoples. But anyway, I am not considering this is a valid trade. The reason is, this is the area we fine-tuned. But the problem is, the fine-tuned zone is already tested. Let me go to 5 minutes time frame. See here. Prices went and came down. Maybe you may ask a question, because see, there is a strong rejection. Can we consider another trade? Because this is already a fine-tuned zone. If it is type 1 proximal, definitely we would have considered second trade. Or if it is a high liquidity zone, we can consider. So you need to check our software. But I think I looked into the software. This is a normal supply zone only, according to the software. So anyway, we can't plan a trade in this zone. This is the drop-based draw. This is the only one area, valid zone, you can plan a trade. There are higher chances this zone will be violated next time. But anyway, prices didn't come today. The only thing why there is a strong order flow we can feel, because of this rejection. See here. They are all in favor. Maybe they will be tempting us to go for taking another trade in this zone. But that is quite risky. If anybody feel the risk is very small, even if it is stopped out, it is okay for you, then you can plan a trade. But otherwise, it is a risky trade. Planning a second time when the zone is already tested. And it is not a high liquidity zone. Not yet high liquidity. Maybe in future it could be a high liquidity, but at this point of time it is not a high liquidity. Because software is also not confirmed. Okay, this is about the Glenmark. But Glenmark we got a trade where in the demand zone we got the trade today. See here. Prices reached, when it reached? At 14:15, 2 o'clock 15. That means it is the last 1 hour trade. Last 1.5 hour or last 1 hour 15 minutes, we call it as a last hour trade. So during last hour trade, target should be 5 minutes only, not 15 minutes. So here you have a 5-minute zone. You have a rally, 2 base candles drop. See here, prices entered, it gave you a trade, reached the target. It gave you again a second trade, once again it reached the target. That means you got 2 successful trades. But unfortunately, we have not accepted this trade. Why? What is the reason? Can you think? You must be knowing these reasons. The reason is RR, risk reward. There is only 1:2 RR is there between these demand and supply zones. We expect a minimum 1:3. If you are an highly experienced person, 1:2. But you might be saying, see, today we missed 2 successful trades. Even 1:2 is also good return. Forget about the RR, it is a good return. 2 successful trades, especially during the last hour of the closing session. That may you say, but we should not go against our basic fundamental principles. If it is stopped out, suppose if it is stopped out, what will happen? Because most of the times our high liquidity zones are having higher success rate. There are higher chances of getting success. But you should also forget, there is a 20% failure rate is also there. Even though you have success rate is 80, you suppose if this stock comes under 20% category, then? So because of all these reasons, RR is very important. Due to RR, we rejected this stock. But otherwise, if anybody would have taken a trade ignoring the RR, still you would have got 2 successful trades today. But it's not a valid trade according to our rules. So that's why I have not maintained any statistics related to this trade. And same is the case happened to TVS Motor. TVS Motor also same reason. But anyway, let's discuss. This is a 75 minutes high liquidity zone. Sorry, this is also daily supply zone, not 75 minutes, daily. We have a drop, base drop. This is a high liquidity daily supply zone. So we have fine-tuned this zone with 75 minutes time frame. There is no 75 minute zone here. Have you noticed? But I have drawn 15 minute zone. Why? Because of price action clue. Prices came close to the 15 minutes and came down. Because of that reason, I went to the 15 minutes time frame. See, there were rejections started before going and coming down. Again, they were going, coming down. Definitely, order flow could be very strong. So due to that reason, I have drawn this drop, base, drop. Rally, base, drop. It's a rally candle. That's why till the distal line of this rally candle, we have drawn this zone. The higher wick of legging also should be considered if it is a rally based drop. Okay, now again fine tuned with 5 minutes time frame. So here, these are all the aggressive trades, please remember. Which one? This entire zone, 75-minute zone. So we have a rally base, entire 15-minute zone. So inside 15, again we have a rally based drop. Actually, we have to draw zone like this. But why I have drawn type 3 is because of high risk. See, the risk is very high. So that's why I went to the type 3. And also I confirmed, I went to 1 minute time frame and checked whether there is any order flow. See here we have order flow, rally based drop, again drop based drop. If at all, if you want, you can adjust up to here, this zone, up to this 1 minute level. This is also a valid way to draw. Nothing wrong. Because here you have the entire order flow. If you go to 5 minutes time frame, the zone will be looking like this. So earlier we have drawn up to type 3 proximal. Now if you draw, it will come like this. Anyway, it doesn't make any difference, much difference. So that's why what I did, up to type 3 level I have drawn. There is a reason behind. See, there is with a gap down it started, with a pro gap. Maybe the gap is filled later. That is a different story. With a gap down, the next candle is started. Which candle? Leg out candle. So that means there is a strong order flow will be there in this area. This is my conclusion. How I am thinking about to measure the strength of the order flow here. With a gap down it started. That means with a pro gap it is started. That way also this is a aggressive trade, another justification with pro gap. With pro gap also we can consider. Later the gap is again filled. That is a different story. Gap is filled, and after that see the push down, such a strong leg out push. So because institutions added a very strong order flow here. And another one is drop based drop. On all these rejections earlier we have seen, they are all because of near to this there is a strong order flow in this area. That's why we have seen the price action clue rejections before the zone. Again here also before the zone. So definitely we can plan a trade when prices enters here. See here how successful it was. Once prices came into the zone, see the push down. But this is not today's trade. This is on Thursday, May 9th, prices entered and then came down. But what about today? Today again prices came and again from here it came down. But we can't plan a trade. The reason is this zone is already tested zone here. That's why we didn't plan a trade. Otherwise, it would have given you a profit up to this 5 minutes supply zone area. You have a good RR also from here. What about 15 minutes target? No. 15 is very, very far away. Because 15 is very, very far away, 5 minutes is good enough when RR is there. But we can't plan a trade because we never know that it will be a successful trade. Because it is a tested zone, there are higher chances the zone will be violated. After that, there is one more test from the same zone, but push is not good enough. That means strength is not there. It is currently holding the prices, not pushing down. That's why we can't consider this as a high liquidity, because even though multi-testing is happening, see, ultimately today the zone is violated. See, after that, again, we got the type 3 entry here and reached the target, 5 minutes target. Why 5 minutes target? Because this is the last 1 hour trade. Prices entered into this fine-tuned zone, and moreover, this is a type 3 proximal. When it went at 2 o'clock 35 minutes. Afternoon 2 o'clock 35 minutes we got the entry. So it's the last 1 hour. Definitely our target should be 5 minutes target. So it reached the 5 minutes target. So it is a successful trade during the last 1 hour of the trading. But we can't accept, because RR is only 1:2.2. 1:2.2 is there. So less than 1:3. So that is the reason why we can't accept this trade, because of the error. See, again last minute also again prices went and came down, reached the target, again pushed and closed. Maybe last 5 minutes trade, this is before closing the market. All these are all looking like our successful trades, but you missed it. It's not that we missed it. They are not satisfied with our rules. Minimum acceptance criteria is not satisfied as per demand and supply zone price action concepts. That's why we did not accept these trades. And next one is ONGC. ONGC is again, this is also daily, right? Daily or 75? Let me check. This is a 75-minute zone, demand zone. Rally, base, rally. This is what our software identified. This 75-minute zone is fine-tuned with 15 minutes time frame. In the 15 minutes time frame, we don't have any 15 minutes fine-tuned area. The reason prices came up to this area. And here we have a 15-minute zone in the recently. Drop, base, rally, 15-minute zone is there, recently created. But yesterday only this zone was created. But today we didn't get the entry. But why I drawn one more zone here? This is a 5-minute zone. Why I drawn this 5-minute zone? Let me show you. Let me go to the 5 minutes time frame. First let me show you this. Here we have a drop, base, rally. Zone is looking very excellent. But see here, it picked up the orders and moved up. That means there is a strong order flow in this area. And the only reason I have drawn this zone is just to confirm whether this could be a high liquidity. But there are no more tests after this. Maybe in future again, if it pick up the order and a new zone is created, then maybe we may consider this zone. But now also, why I am thinking this is a high liquidity zone? See here. We have a leg candle, ERC candle, leg candle. You have a base candle. You have a rally candle. That means a new 5-minute zone is created from this 5-minute zone. When such kind of things you will observe, in high liquidity area only you will observe. That is the reason why I am suspecting this could be a high liquidity zone. Because high liquidity area only, say, new zones will be creating. That's why I want to check if prices next time comes, whether it is working or not. So this is the one main reason behind drawing this zone. If the risk is small, there is nothing wrong in trying again in this zone. But this is a fine-tuned zone. So inside this 15-minute zone, we have a drop, base, rally. So definitely we can plan a trade. But prices did not come today, so we didn't get a trade in ONGC. And next one is Sriram Finance. This is a 75-minute zone. So drop, base, rally. This is a 75-minute zone identified by the software. This we fine-tuned with the 15 minutes time frame. See here, you have a drop, base, again a rally candle, ERC candle. So drop, base, rally. Now again fine-tune with 5 minutes time frame. This is a drop. 1, 2, 3 base candles, rally candle. But I am supposed to draw zone like this, right? But why I have drawn? This is a type 3 entry. See, I am supposed to draw zone like this because the risk is very high. That's why I have drawn type 3. Probably this is the area order flow is there. That's why this leg out candle is picked up the orders. See, this is the way you should analyze. But is your analysis is really correct or wrong? See the next price action. See, again price is picked up from this zone. See the huge rejection from this zone. Again recently picked up the orders from this zone. Again recently picked up the orders from this zone. Maybe this is a high liquidity area. Because it is a high liquidity area, there is nothing wrong in planning another trade here. See, today Bank Nifty we got 2 successful trades. Even third one is also successful. But because it is pierced, you should limit to target to 5 minutes area only. Even that one is achieved. So that is the reason why nothing wrong in planning again next trade. It could be successful, but sometimes it also fail also. That's why you need to check the risk. If the risk is very small within your accepted level, nothing wrong in trying. Because high liquidity areas, especially in 5 minutes levels, if opportunity is there, don't miss it. Especially in the fine-tuned 5 minute zones. But you should also remember, every high liquidity zone will have an expiry period. When the time comes, it will expire. That means the zone will be violated. That day your order will be stopped out. You have to accept that. Until that time, whatever the number of trades, you will enjoy those profits. But anyway, prices did not come into this zone today. We didn't get a trade. Next one is Axis Bank. Axis Bank is a 75 minutes zone, a supply zone. We have a drop, 2 base candles and a drop. This is the 75 minute zone. This 75 minute zone we fine tuned with 15 minutes time frame. So this is the drop, base, drop. Drop, base, drop. Actually you can draw 15 minutes area up to here. Drop, base, drop. Within this 15 minutes area, again you have a fine-tuned 5 minutes. This is a ERC candle. This is a leg-in. This is the leg-in. You have 2 base candles and a drop candle. This is the type true. Something is wrong. Okay, now you have clarity. So this is the 5 minute zone, because I gave same colors for both 15 minutes and 5 minutes. So that's why both are mixed together. Okay. So this is the fine-tuned 5 minute zone, but this fine-tuned zone is already tested here. But how it is tested? Just touched the proximal and then came down. This entire thing is a rejection. Prices came down continuously. So, and the width of this zone is high. Can we plan another trade? But risk is high. That's why in case if any, look at 1 minute level. 1 minute level, if you find any order flows near the digital line, multiple order flows. One order flow is a very danger. Then you can plan the trade. You have drop, 2 base candles, drop, not great leg out. Anyway, it is quite risky planning again second trade. Not really, I am convinced with these 5 minutes order flows. Here you have rally base drop, one order flow. We don't know how strong. Maybe if it is strong, nothing wrong in planning one more trade here. But at the time what you can do, you just limit your risk to this area. See, many times we never know how strong these 1 minute order flows. So that's why I am not encouraging you guys to fine tune to 1 minute level. But anytime if you are like feeling like to plan second trade by seeing, most of the time we will be tempted by seeing the rejections. Rejections indicate strong order flow in general. But there are times they will also fail. So that's why. But the risk is high. What you can do, you can keep a digital line stop loss here. This is the way you can plan a trade. Second time, if you want to plan a trade, maybe let the prices enter into this area and keep your digital line here. Or if you can manage the risk, keep an entry here and digital line still the 5 minutes digital line. That way also you can plan. It's all depending on your risk management. Because 1 minute area is not tested. But remember, 1 minute is not the guarantee. This is the point you need to understand. Because risk is high, just we are depending on that. Most of the times 1 minute they will not give you assured guarantee. Like how we are planning trades in the fine-tuned 5 minutes, same way you can't plan in fine-tuned 1 minute zone. Fine-tuned 1 minute zone is only you have to use for confirmation. When you have some doubts, to clarify those doubts, 1 minute can be used for confirmation to support your judgment, but not for planning your trades, especially in high liquidity zone strategy. That is one of the reasons why I am afraid to enter into these 1 minute related discussions, because some of you people are when I talk about 1 minute, you are assuming something and you are drawing your own decisions. And one day they will backfire, whatever the assumptions you are making. So that's why I am strongly recommending you people not get into 1 minute level. 1 minute is only for your judgment purpose, confirmation of your judgment, not for taking the trades. But sometimes when you are tempting by seeing the strong rejection in this area, if you look into the 5 minutes, just touch the proximal line and there is a good rejection and there is a good fall also. Maybe you might be believing there is a strong order flow. In such kind of situation, maybe you may take a trade in the 5 minutes level itself, but your stop loss could be 1 minute digital, or 1 minute could be your entry and 5 minutes digital line could be your stop loss. That way different strategies you can build and you can plan. Or if you have any doubt, just ignore it. Look for some other stocks. But anyway, today we did not get a trade in Axis Bank. And the last one is Ramco Cement. This is again a 75 minutes high liquidity supply zone. I think yesterday I explained this Ramco Cement. Oh, last candle today, last minute. Because before I started recording, the prices didn't enter into this area. But anyway, so we have a 15 minute zone we fine tune. We have a rally, 3 base candles and a drop candle. Again fine tuned this 15 minutes area with 5 minute zone. Here we have 2 order flows. Rally 1, 2, 3, 4, 5 base candles. 1, 2, 3, 4 base candles and a drop candle. And another one is a drop base drop. This is the high liquidity area. Several times this zone is tested. See here, first time, second time, third time. Third time prices went more deep inside. See again, fourth time, just from the proximal line itself again, prices picked up. Because high liquidity, that is what happens. See what happened today? This high liquidity area is violated. Now finally it picked up the orders. This is what happened in the last minute of our trading. Before prices entered into this area, I started my recording of this video. The last time when I looked into this did not enter into this area. Somewhere here the candle was there. This is at 3 o'clock 5 minutes. Now this time high liquidity zone is pierced. Actually, strictly speaking, it is violated. And picked up the orders. Actually, didn't entered into the 5 minutes area, but definitely the entry buffer area, the prices entered. Last 10 minutes of the trading. And here we have a 5 minute zone. See here. This is the 5 minute zone. Let us assume you are planning your trade in the last 10 minutes. Let us assume here you took a trade. Look into the 1 minute candle. What happened? So in this candle you would have got your entry. If you added the entry buffer. If you added the entry buffer, you would have got a trade here. After that, in which at exactly 3 o'clock 20 minutes you would have got a trade. There was some movement here, and after that, see, the prices came down and again reached here, and the demand in this area. This is a demand zone. Your target is the demand. So 5 minutes target it reached. After that, again it pushed the prices up. See, in this candle it pushed the prices. And finally here in this candle, last candle, it reached the target, and from here again it pushed. And you have good RR also available here. Maybe definitely, it could be definitely not less than 1:5 RR. Let us check how much RR. For short position. Let me add some stop buffer also here. And let me add some entry buffer. Otherwise, then only you get the trade. Otherwise, you would have missed this trade. Let us assume this is your entry buffer approximately. With this, how much RR you would have got? Because it is 1:5.15, 1:5 RR. Even after adding stop buffer and also entry buffer, you got 1:5 RR. And the whole of your trade would have been completed in last 10 minutes. See, these are the zones we have drawn already. Yesterday also I shown you this. This one we already discussed yesterday. But how many of us really dare to take a trade during last 10 minutes? Definitely we won't, right? We never take intraday trades during last 10 minutes. Even last half an hour also it is risky. Last 45 minutes also you will avoid most of the times. But why I'm telling you? Just I'm telling you to check the power of our high liquidity zones. You may ask a question, why this zone is violated today? It is slightly stopped out. Slightly. Maybe, I don't know whether it is stopped out. It could be still in the entry buffer. But anyway, this zone is tested. The reason is, it is already tested several times. High liquidity zones, after testing several times, 4 or 5 times, some expiry period will be there. Some zones may work for 7, 8, 9 times also. See, this is already tested once. This is the second time. This is the third time. This is the fourth time. 4 successful trades it has given. And today it is the 5th time. And today it got its expiry period. But just above that, fine-tuned fresh zone is there. This is a fresh zone. Even prices just about to enter, maybe with few paisa. What is the entry of this zone? 770 to 15 paisa. And what is the high of this candle? 772. That means 15 paisa difference. So anyway, Ramco Cement, we can't consider this trade because we can't consider this trade for the intraday point of view because this is the last 10 minutes price action. I'm only discussing to make you people understand the power of our high liquidity zones because they have such a strong order flow. Otherwise, you can't see such kind of price actions. Because the order flow is very strong, it pushed the prices down. Maybe this is a newly created 5-minute zone. Here also institutions might have kept strong. Maybe they wanted to violate this high liquidity zone. That's why they kept and pushed the price. But whatever the push they did, it is not good enough to violate this zone. Because already this high liquidity fine-tuned area, they have a strong order flow. That again pushed the prices down till the 5 minutes area. This is how you should understand this price action. Hope this information will be useful to you. I think we had a very good study in this video. Interesting scenarios we have seen. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.